What's good, fam? Hope you remembered it was Parents' Day on Saturday in Korea and International Mother's Day on Sunday and acted appropriately. Been a minute since we dropped one of these, so let's get to it. You're watching Sekider, and this is what we're watching for the week of May 10th to the 14th. Today, we're looking at top line and bottom line earnings, what they mean, and how to read them. Now before we get into it, we just like to remind you that this channel is meant for general education purposes only and isn't meant to be a replacement for any legal or financial advice from a paid professional. No mention of any stock should be considered as advice towards buying, holding, or selling. We're just here to help you get to know our market better so you can get out there and do the thing for yourself. So, if you like the content that we're putting out on this channel, please do us a favor, scroll down, hit the like and subscribe buttons, and we'll try to keep the videos coming on the weekly. But enough about us, let's get to the stocks. Alright, so today we're just going to talk about a couple small cap stocks that can help us demonstrate the importance of understanding both top and bottom line growth and using them in your evaluations. The first one we want to talk about is Hanil Networks. Now Hanil Networks belongs to the family of Hanil Holdings, whose primary business is in the cement and industrial sector. Primary, not primary. Hanil Networks is as it sounds. It's a company that primarily deals in network projects and solutions for other companies. Don't know if you've noticed this yet, but we at Sekido really love companies that are business to business because, more than anything, they're not sexy, and for that reason people sleep on them. Anyways, Hanil Networks is interesting because, on the surface, it seems like a fairly low stakes bet at present just based on a few basic numbers. First, profitability. Now if we look at their revenues, we don't see a great trend with overall decrease in top line earnings over the past 3 years. But that doesn't bother me too much after looking at their bottom line, aka their net income, which has grown over the course of the same time. Furthermore, their operating income, or the profit minus the cost of running their business, has grown significantly over their time as well. Now a company like this gives us a good opportunity to think about the differences between top line earnings, aka revenue, and bottom line earnings, aka net income. Now let's talk about what they mean and what we can learn from them. In general, the top line earnings represent the sales of a company over a given period. Thus, if we see top line earnings growth, then we can just assume that the sales of their products or their services have been growing over time. Comparatively, bottom line earnings are the company's numbers minus the company's expenses. It's a good metric to understand the profitability of their entire operation with all things considered. So, there are situations where revenue may be growing but bottom line earnings could be shrinking due to an excess of cost of operations. Conversely, you can see situations where the bottom line is growing but the top line is dropping due to management decisions that make making money easier for the company. So for Hanil Networks, while their sales dropping is a bad thing, this can happen for a number of reasons. Maybe they're losing market share, or maybe the industry or economy had a bad year. These are all normal things that happen, and while they may be symptoms of a larger problem, it's hard to deduce from the top line numbers alone. When we calculate things like EPS and PER, there's a reason we use net income rather than revenue, and that's why we're talking about Hanil right now. Now looking at their net income and bottom line, we see that since 2018 there's been an obvious bottom line growth, with 2018 falling hard from the year prior. I did some very basic digging into their yearly reports and found that the 2017 income spike can be traced to the sale of subsidiary holdings, leading to a massive windfall. Outside of this aberration, however, it seems as if their bottom line growth, number 12 on this chart, has been on an upward trend reaching before 2017. And this is a good starting point. If it intrigues you, I recommend calculating their cash flows to dig even further, though it should be noted that their reports are all in Korean, so I only really recommend doing so if you're willing to commit the time and energy. Honestly, if you're really beginning to dig into the crates the way that we do, it's not a bad time to start and practice using Korean language filing, since there will be times where you don't have an English language option. Now, let's get focused and move this along. Their PE is sitting at just below 10, which is reasonable in an industry where the average PE is around 30, but it's also understandable given that their market cap is rather small, sitting at around 71 billion Korean won, or 64 million in US dollars. For real, one thing that we actually like, that we really like, is that their EV to EBITDA is a measly 2.02. If you want to know what that means, click the link in the top right hand corner for a full description of the EV to EBITDA ratio, but if you know, you know. In any case, if you've been out there looking for a small cap sleeper pick to add to your watch list, take a minute to read over their investor materials and see if it's right for you. Cool. Next up, we have Action Square. Action Square was a company brought to the market via SPAC back in 2017, and has been historically focused on the development of mobile phone action RPGs. They've recently been expanding to other platforms including the Nintendo Switch, and are looking to establish a presence across other platforms like Steam and Xbox. The biggest games are Blade and Blade 2, and it was reported last year that they are currently planning a game based on the hit Netflix series Kingdom, aka Zombies in Chosun. Since their inception less than 10 years ago, Action Square has been able to wrangle a few significant awards for their games, and they've been making efforts to expand into the global mobile gaming market with the sci-fi shooter Galaxy X. Given the very young age of this firm and its limited history on the market, it's not surprising that we see it sitting at a market cap of 165 billion won. That's double the size of the previous company we talked about, but it's pennies when compared to market giants like NCSoft, who has a cap of about 17 trillion. On top of this, we've seen steady decrease in their revenues over the past 4 years, leading to some utterances of why even care about it at this point. Well, we like to give everyone their fair shake, and sticking with the theme of top and bottom line earnings, let's take a look at what's happening down low. Now, while the company has been losing money, as is represented by their net negative income losses, they have been able to reduce the amount of money that they're losing year on year. Specifically, since 2017, the amount that they've lost over the course of a year has dropped by 83%. Plus, while their revenue has been dropping, it hasn't dropped at the same rate as their net income losses have been shrinking. We have touched on the importance of a trend like this in our video on HMM a couple weeks ago, so check that out if you're interested on understanding that better. But this brings up a big question. We've been pretty vocal about how much we prefer companies with sustained positive earnings, and Action Square has thus far reported sustained losses. Wouldn't even concerning ourselves with this company qualify as speculation? For sure, fam. But keep in mind that we're not calling this a buy by any means. It's just a good way to demonstrate a few things. 1. SPACs may turn out good companies, but the companies acquired may not perform to expectation for the first few years of their existence on the market. 2. Virtually everything on the stock market is speculation at the end of the day, but there's a difference between speculating on a stock and speculating on an actual company that's underlying a stock. As we watch Action Square going forward, we get to know the company better based on their fundamentals. The assumption we make is that a stock's price will reflect its profitability over time, and getting in on a company as it moves from red to black is what put people that invested in HMM last year up 700% this year. It's important to note, however, that this may not happen, and if not, it may be time to reevaluate. But until then, you lose nothing by being informed about a certain company's situation. In any case, Action Square is an up-and-coming gaming company that has achieved critical success and has consistently improved the profitability of their operation over the past few years. Once again, if you're looking for a small cap sleeper pick to throw onto your watch list, this may be another one of those. Alright, that's it for me. Hope you found these companies interesting, and if you did, please drop a line in the comment section and share this video around and help us get picked up by the YouTube algorithm. Stay safe, be easy, see you next time. Peace.